King. We're on the floor of the New York Stock Exchange, where everybody's looking forward to a few big IPOs this year. After a lukewarm public debut, though, for Lyft on the NASDAQ, and then Pinterest's valuation dipping, it may be time to take a closer look at unicorn companies looking to go public this year. For more on this, we're now joined by George Say, who is Annandale Capital CEO. George, great to have you here with us today.
Great to be here. Thank you for having me on.
Absolutely. We got to start with Lyft, since that's the most recent to come into the public foray. Do Lyft and now Pinterest as well, their S-1 filing, their weakening investor interest. Does that have any effect on Uber or other companies that are planning to go public?
No question. I think it'll be part of a trend, and I think that the wide swath of IPOs we're going to have this year after such a mundane IPO market for so long is great for America. It's great for capitalism. It's great for Silicon Valley. It's something to celebrate. But investors are looking at all these companies and seeing dynamic companies with incredible growth and no profits. And unless you want to bet on a hope and a dream, or that you feel like you've got information that allows you to analyze these businesses better than somebody else, you're taking a tremendous risk in doing this sort of investing. So I think that people are skeptical. They should be skeptical, and they should be really careful. The people who got in early on the seed rounds while these were private businesses are all doing terrific. The ones in the public markets, it's a little more questionable. If you look back at the last 20 years of IPOs, 5 years later, the majority of them, around 60%, have been negative from their IPO price. So it's an area to tread very warily, although at the same time you can get into an Amazon or a Google or another FANG stock and hit a massive home run. So it's a high risk, high reward area.
Right, exactly. I mean, those stocks right now, those FANG stocks are pretty expensive, but, pretty steady, right, in terms of their performance quarter over quarter. And as you mentioned, a lot of people are looking at some of these investments as maybe getting in really early on the next Amazon. But what does it say when a Pinterest is coming into their IPO on a more or less a down round, and also Pinterest waiting this long to go public?
Well, I think waiting long to go public is smart. You have a more seasoned business. You've got something better to sell to investors. And I would say, except for the last private round that probably are very unhappy right now, the earlier investors are going to be extremely happy. And I think the public markets are taking that as a signal that Pinterest is going to be realistic about what they're worth. And they're pricing at a price per sales that will be more attractive to investors. And I think it's a mark of humility that they want anyone buying in on the IPO to actually make some money once their security starts trading and their growth in sales at least continues to go up. And Pinterest is a lot closer to profitability than some of these other unicorns, so I think that's somewhat attractive as well. But I salute the founders for doing this. I think it's realistic and it's humble and it's structured to try to get anyone who bets on them on the IPO a chance to make some good money.
Mm-hmm. With all of the unicorns that are galloping into the public markets right now, George, is it more beneficial to get out early, get out and be one of the companies that comes out in the first half of those unicorns, those decacorns that make their entrance into the public markets, or should we expect some to come even as late as September of this year and still be able to see some type of major traction in their IPO?
Well, it's such a large pipeline. You've got over 200 companies trying to raise over $100 billion with a total market cap of $700 billion, and it's kind of like launching a movie. You don't want to bump into a whole lot of other people that are attractive at the same time. It might hurt the demand for what you're trying to do. So they're going to have to spread them out over the year. I would encourage investors to look at the substance of the business coming public, because unless you're a short-term trader and you want to try to get in on the IPO and flip it immediately, as it usually trades higher, at least initially. If you're a long-term investor and you want to bet on a company over a very long period of time, you're not that really worried about the gyrations day to day, and you're not really worried about if the IPO comes this month or comes in October, even though October is historically a bit of a volatile month for the stock market. So it depends on your perspective.
Yeah, okay, so let's talk about Palantir, because we understand that that's something you're very excited about, this IPO, a pretty secretive company, but based on a lot of the data that they've been collecting and using with the government.
Palantir is a real business, and they have real contracts with the Department of Defense. It's been interesting to me to hear all the political posturing on the West Coast about doing business with the government and Google not wanting to help the Department of Defense, while at the same time they're doing an awful lot of things with China lately. When anyone who knows if you're doing business with China, any technology transfer that you provide or any business you do with them is going to go straight to their national security institutions as well. So I think it's great that Palantir was formed and is doing all this wonderful business with DoD and is a real business, and they just signed another large contract, and Peter Thiel's track record is just outstanding, and I think this is going to be a very successful American company for a long time to come. And it's not on a hype and a dream. I think it's a function of reality, and I think that would be a good one, pending the financials and analyzing those well and the growth rates going forward, because, of course, every business is worth what its future free cash flow is, and the growth in that free cash flow taken back to a net present value. You want to take a hard look at that, but I am very excited about that IPO, and I'm glad it's going public. I think it's time for it to do so.
In terms of the valuations of these companies that we're seeing coming public, have we just been watching an era of kind of euphoric state where companies have been able to show that they can be unprofitable and have some type of growth trajectory, and tell venture capitalists, tell these early investors that once we do go public, we're going to be able to get to that profitability later on down the line, but we just need that vision and you on board with that vision as of right now?
I think they're just really bright to be going public right now and seizing a big wad of public cash 10 years into a bull market when they've gotten large enough to justify themselves as a business and leave to the gamblers and the risk takers and people who want to bet on the come on them whether they'll ever be able to get to profitability or not. Many of these companies will, and quite a few of them won't. And I think it's a great thing for capitalism and a great thing for Silicon Valley, and I salute all these unicorn founders for not only building a company of this magnitude, but having the wisdom to take it public and grab a whole lot of cash that's going to allow them to be a viable business for many years to come. The timing's perfect for them, I think.
Yep. All right. Good stuff. George, thanks for being on with us. George Say is Annandale Capital's CEO. Thank you so much.
Great to be here. Thanks for having me.
All right, we do have some breaking news. Boeing releasing those delivery numbers of their aircraft. First quarter commercial airplanes deliveries, 149. That's the number, and it's down about 100 here.